Good evening. It's just 6:30, so I'm going to get started and be mindful of those of you who show up on time and be mindful of your time also. Just quick introduction. My name is John Serafine. I'm the Director of Counseling here at McQuaid, and we really appreciate you coming out tonight. This is our second live presentation that we've done, so it's kind of nice to see real humans instead of sitting at my kitchen table doing the Zoom presentation. So again, thank you for coming out. Before I introduce our featured speaker tonight, let me just throw a couple random thoughts your way regarding financial aid, the process, and just some random thoughts about financial aid in general that I just kind of jotted down. The first random thought I had is this. I hear a lot from people, and having done this for numerous years, one of the common refrains I hear from people is, I talk to my coworker / neighbor / relative / friend who went through this financial aid process, and he or she didn't fare very well in the process, so therefore it doesn't even make sense for us to go forward with the process. And I think that's a dangerous way to approach financial aid, because everyone's financial circumstances are different. There are changes in the financial aid process every year, so I really would encourage you not to lend an ear, at least a strong ear, to other people who have gone through the process and have varied results. The second thing I would say to you about this process that I've learned over years is pay very, very close attention to the deadlines, because this is a pretty unforgiving system. If you miss a deadline in the financial aid world, it really has some negative consequences, and I don't think you want to put yourself in that situation. Mm-hmm. The third thing I would say to you is this. As the father of four, I can vividly remember completing my 16th FAFSA and kind of going, so done with this process. It felt really good. But I can also tell you, and I may be in the minority of people who feel this way, is that I really firmly believe that the process works if you let it work. I think it does exactly what it's designed to do, and it tries to meet your need and make college affordable. But I think you have to let the process unfold a little bit and be patient. Here at McQuaid, the counselors, I feel really comfortable in their level of knowledge regarding the financial aid system. One of the things I tell the counselors every year is do not play the role of financial advisor. That is not who we are. All right, we are counselors. Jeff Griffin and I are college counselors, and we're knowledgeable about the system. We can certainly walk you through the system, but what we won't do is try to tell you how to move your assets around and what to do with your 529 plan, to how to make you a little bit more eligible for a financial aid package. I have a very hard time balancing my checkbook, so I'm the last person in the world you want to try to give you financial advice whatsoever. But we do hope that if you have any confusion or concerns, or you want some help with the financial aid process, that you'd reach out to us in the counseling office. The other thing I would say to you is, I think early on in the process, when kids are looking for colleges, it's not unusual to be scared away by the sticker price. I mean, you're going to find price tags dangling from schools that read upwards of $78,000, $79,000, $80,000 a year. And I would at least encourage you early on in the process, don't rule out schools solely because of price tag. Now, at the end of the process, it very well may come to be that. It may come down to a financial situation. But I think, like I said earlier, if you let the process unfold, then you'll get a true picture of what finances are going to look like. Because a school that costs $80,000 on a price tag, and a school that potentially costs, let's say, $25,000 or $30,000, after you let the financial aid process unfold, they may be very similar. So again, one of my words of advice is don't just rule out a college based on the sticker price that you see. And lastly, I would say, work with the college financial aid professionals, because they're good people that are on the end of the table. We've got a good one here tonight. And their job is quite simply, they're trying to make college affordable for families. That's their role. And I really believe that, and I've seen it play out. And I think you have to partner with them and work closely with them to accomplish that. All right. So again, I'm going to turn this over to the expert. And Janice Schutzow is the Director of Financial Aid at Nazareth College. She's been kind enough to do this presentation here for the last 3 or 4 years that I've been here. And prior to this, when I was in the same position at Fairport High School, Janice spoke there also. And I ask Janice every year for two reasons. One, she's incredibly knowledgeable about the system. And number two, I think her presentation is really pragmatic, it's understandable, and I think you'll leave with a pretty basic understanding of, okay, this is how this works and what I need to do. So I'm going to turn it over to Janice, and thank you.
Thank you, John. Good evening, everybody. So glad to see you and have you join me tonight about the exciting financial aid topic. So let's start. Here's my contact information. You can feel free to call me if you have a unique question. Doesn't have to be if your student's going to NAS. Our financial aid professional pool is very helpful and conscientious of guiding our families through often this new and scary experience a little bit. So we're here to kind of take that confusion away for you. So tonight's agenda, we're going to talk about the FSA ID. Let me just confirm who my audience, we're like senior parents going into school, fall 22 mostly. Okay. Has anybody started? Well, you can't start the FAFSA until Friday, but has anybody done a FAFSA for other children? A little bit familiar. Okay, perfect. Okay. So tonight's agenda, FSA ID. We're going to talk about the federal process, the federal financial aid process, federal methodology, particularly tonight. I will mention some CSS profile information, but typically my presentation is about the federal methodology. So to do so, FSA ID and FAFSA application. We're going to talk about the steps involved that. And when I go through what the FAFSA is collecting and stuff, it's going to calculate what's called the expected family contribution, EFC. If you learn anything tonight, you'll learn that our world is all about acronyms and three-letter acronyms. So the first one is EFC, expected family contribution. I will share with you what the schools are using, how we're using your expected financial contribution to determine your student's financial need and package your financial aid accordingly. So we'll go through that a little bit. I'm going to talk about financial aid types, scholarships, grants, loans, and work study. They're all type of financial aid. And they'll wrap up with some closing comments. And feel free to if you can hold your questions to the end of the presentation, and be happy to answer them at that time. So can everyone hear me okay? Okay, perfect. The federal student aid, FSA ID, and the free application for federal financial aid, keyword being free. To begin your FAFSA filing process, and this opens up Friday, October 1 of this week. You can begin doing your FAFSA for the 22-23 academic year. I would hold off on doing it on Friday. Let some other newbies do it and work out the kinks in the federal system. Maybe you want to do it the next week or week after that. But you can technically begin to do it on Friday. So how I would start the process is create a student username and password called the FSA ID and the parent username and password, or the parent FSA ID. These are your electronic signatures. This is how you and the student are going to sign the FAFSA at the end of the process. And if the parents need to borrow what's called a Parent Plus loan later on in the cycle, this is how they will identify themselves and sign their Plus application with their parent FSA ID. So here's the information that the FSA ID is going to collect. So basically it's your email, confirm your email, create your username and password. And I have a circle here on show text, because if you show the information that you're typing and make sure you're typing it correctly, and like myself who missed, I'll have a typo here or there. So you know what your expected username and password is, what it is. Take a picture of it on your cell phone and keep it in your photos on your phone so you'll have it handy and easily accessible next year when you have to figure out what was my username and password for the FAFSA. We suggest creating this username and password at least like 3 days before you want to do your FAFSA filing. It gives the federal system time to go through their checks and balances of being a US citizen and being eligible for federal aid and not being in default, et cetera, and will allow you to use the IRS data retrieval process when you are getting into your FAFSA and wanting to extract your tax return data. So it's a little helpful to get that ID set up. Has to be a unique email address for the student and the parent. As parents, I know so often we want to control the situation and we want to list our email address for the student and our email for us also, but the feds do not like that at all. So the student has to have a unique username and password and email, as does the parent. But then this is a one and done process. You keep and use these username and emails or FAFSA IDs for the rest of your processing time. You don't have to create a new one every year, and the parents don't have to create a new one for a different child coming up through the ranks. Your username ID is it for forever. Getting past the username and ID, I think we've got that clear. How to begin the FAFSA is you want to visit FAFSA.gov, G-O-V, not FAFSA.com. That is a paid site that after you take the time and energy to knuckle in all the numbers, they're going to want a credit card number to submit your FAFSA. You are on the wrong site. The FAFSA.gov is the free application for federal student aid. As I mentioned, it opens up this Friday, October 1. For the 22-23 year. Here's a screenshot of the landing page. You want to click on the Start Here button for the new to FAFSA processing year. As a returning student, you're going to do a FAFSA once a year for your sophomore, junior, senior years. Then you click at the Returning Student button, and a lot of the demographic information for mom and dad and student will populate easily for you. You can also file your FAFSA on a mobile app, My Student Aid, if you want to download that and make it a little easier, you can do that also. So you've created the username, you've gone to FAFSA.gov, this is the login page. Again, if you missed creating the ID, there's another little hyperlink to create the FSA ID right here, and this is how you're going to begin the FAFSA. Make sure you choose the right FAFSA to complete. As you go to FAFSA.gov in a few weeks, you will see 2 FAFSA years to do. You will see a 21-22 for our current students who still have an opportunity to file a FAFSA this year. And our freshmen for fall 22, you want to select the 22-23 FAFSA. Oftentimes we have families say, Jan, I did the FAFSA. I'm like, oh, when I go to the site and see, I'm like, oh, shoot, you did the wrong year. So you got to go back in and click the right academic year. Here's a helpful 1-800-FAFSA hotline. If you're home and you get stuck on something, feel free to give them a buzz too. What is the FAFSA collecting? The whole point of the free application for federal student aid, it is collecting the family's personal and financial information to determine need analysis through the federal system. How needy is the student eligible for federal student aid programs? As I mentioned before, it's calculating this number called an expected family contribution number, EFC. The EFC could be 0, it could be $18, it could be $28,000, it could be $999. It's all calculated based on the numbers that you're putting on into the FAFSA data, so that's why I'm here tonight to guide you to make sure you're entering everything correctly. The tip to using the income you want to use on the 22-23 FAFSA is the 2020 tax return year. About 3-4 years ago, the federal student aid switched from prior year tax return to prior year tax return. So everybody should have their 2020 tax return filed by now, unless there's some COVID exception I'm not familiar with. That's why they went 2 years ago to be able to make it easy for families to extract the filed tax return right into the FAFSA, and no one has to knuckle in any numbers. So that is the intent of using prior. You can't choose to use a different year. You can't choose to use 21, especially through the COVID years and with the knowledge of my 21 income is more accurate than my 2020 or something. You have to start with 2020, put that on your FAFSA. If you have unique situations, then that's when you contact your financial aid office, and we have the ability to change to a different tax year. And going forward, to help you decide or remember what tax return year to use, you always want to subtract 2 from the fall academic term the student's doing. 24-25, you want to use the 22 tax return year, et cetera, et cetera. These are questions. You're going to have 2 sections of the FAFSA once you get into it. A student section and a parent section. The student section starts off with demographics, name, address, zip code. It's going to ask the student, what college grade level will you be attending in 22-23? You want to pick first year never attended. Do not pick graduated, do not pick attended before because they did MCC credits or FLIC credits or something like that. Pick first year never attended. The degree that they want to complete or oftentimes they select is a first first bachelor's degree or an associate's degree, but you're not a graduate degree because they graduated high school. The degree that they're seeking as they enter fall 22 is a first bachelor's. Then it's going to ask the student income information. Did the student earn income in 2020? Did the student file a tax return in 2020? Then you're going to enter or use the IRS data retrieval to extract the 2020 student income, wages, taxes, adjusted gross income, etc. Then it's going to ask the student's assets, current assets, as of the day you're filing the FAFSA. On October 12th, 2021, does the student have $182 in their checking account or $5? That's what you put. You don't go back in and adjust it after they spent money. It's a one and done date and time entry. And if the student has any investments or UGMAs, UTMAs, that's an asset under the student. 529s are parent assets. We'll talk about that in a second. But typically the student assets are cash checking savings. Then it's going to confirm that the student is a dependent and dependent on mom and dad's income information and asset information. Typically, the federal methodology assumes a student is dependent on mom and dad's information, and mom and dad are required to be on the FAFSA unless the student is determined to be independent because of their years, 24 years or older, or if they are married, or if they have a dependent that they pay more than 50% of living expenses for, or if they're a veteran of the armed services. So it's going to confirm, a lot of these questions will be no, 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 no. It's just confirming that the student is not an isolated case of independency. There are some rare cases of independency surrounded around homelessness, foster care, legal guardianship, not custody, but legal guardianship, and you'd have to support that with a legal guardianship paperwork. So that's the scoop on the parents, or the student side. Next section is the parents. Starts off with demographics. The biological parent and or step parent or adoptive parent is the parent on the FAFSA. That's it. The custodial parent is the parent, meaning the parent that the child has lived with most in the previous 12 months from the date you're filing the FAFSA is the custodial parent, according to the federal student aid eyes. They don't care who claimed the student. It's not the parent that claimed the student in 2020. Claiming has nothing to do with FAFSA. It's who does the child live with. That is the parent on the FAFSA in a divorce situation. The marital status is as of today. So again, on 12/18/2021, I am married, single, divorced, separated, widowed, something like that. One of those. You pick one of those as of today. If you are divorced as of today but married in the 2020 tax return year, you can avoid the IRS data retrieval because that's going to extract both incomes. You can then enter only your income, your wages, your taxes, your AGI, and represent yourself as a now single household. If you file the FAFSA on October 18, 2021, you're married, filing jointly, and your tax return year is married, filing jointly, and then things change after that filing date, that's when you contact the office. You don't change anything. You contact the financial aid office, and you have to document with supporting information, separate residences, and we can extract out the ex-spouse, if that's the case. As of today, number of people in the household and college. So the number of people in our household are everyone that the parent supports more than 50%. If that ends up being grandma and grandpa that are living with them and you support more than 50% of their care and living expenses, then grandma and grandpa should be on the number of people in the household. If not, they should not. Number of people in college does not count mom and dad, but it does count any child that will be at least full-time, half-time status from July 1, 22 through that year. So if brother or sister are going to be in college at the same time, now you may have 2 or 3 in college. That's what you will list on the FAFSA. And again, the AGI is off of parents' 2020 tax return information. So it's going to collect AGI, taxes paid, additional financial aid information you would list if you had child support paid. You would list that because that will be extracted from the formula in your EFC. You want to list your wages. If there are parent 1 and parent 2 working in that combined AGI from 2020, you want to say parent 1 is X numbers, parent 2 is X. And because that helps you in the EFC formula as representing 2 parents in the household working and giving you some subtractions of expected family contribution. Yes?
Quick question, are you looking at box 1 or box 3 on the W-2? Security wages or?
Wages, box 1.
Box 1, okay.
Untaxed income, you need to list, you have to enter in this information. It will not come through the IRS data retrieval process. Child support received, pension payments paid into your 401k or 403b employer accounts. They're usually in box 12, A through D. The FAFSA is very descriptive. It tells you exactly what code to use. So you have to enter that one. And any untaxed health savings payments. That is considered untaxed income that you could use towards education expenses instead of paying retirement, instead of paying healthcare. So it's just a piece of the puzzle that you have to manually enter. Checking savings, parents, as of today, how much is in my checking savings accounts? You list that. And investment, again, assets do not come through the IRS data retrieval. Only the tax return stuff is coming through on the IRS data retrieval. As far as investments, any money, you have to list any money outside of your 401k or pensions or retirement funds. You do not count your value of your retirement as a parent asset. You do not count the primary equity in your primary home as an investment or an asset on the FAFSA. You only count the home equity in a second home or a lake cottage or something like that, or empty land that you go hunt on. Whatever that may be, that's the value of an asset. 529s come into play here. This is where you're going to add or enter the value of all 529 accounts under the parent asset for all children in the house, whether they're 2 years old or 18 years old. That's how the federal government wants it. And you only have to count the value of any business or farm. Business, if it's over 100 employees, then you count the value. If not, you do not. So that's a quick summary of the FAFSA information questions you're going to see. To make it easy, the federal government has come out with this tool called the IRS data retrieval. And it will exactly grab the data elements you need to enter on your FAFSA. AGI, taxes paid, education credits, if you have an older child that you used education credits for, it will know to grab that information. To authorize the IRS data retrieval, it's going to ask you, you'll get a pop-up saying, do you want to authorize data retrieval? You don't have to. You can choose to just enter your data yourself. And as you begin this process, I would give you, I would recommend having your 2020 tax return information right there in front of you, students, and any W-2s, and asset bank statements if it's not on your phone or whatever, but definitely tax return from 2020 and W-2s. If you're going to use IRS data retrieval, they're going to ask you your parent's address. So you need to enter the address as typed on the tax return year. If it's Whitney Road and it's RD period on the tax return, you want to type in RD period. Otherwise, it won't match. It won't identify you. Don't type in ROAD. So that's why it's helpful to have your tax return next to you, and you can type in your home address as exactly listed on your tax return form. Like I said, you don't have to use data retrieval, but we highly recommend it because it's ease of process, it's more accurate. If the child is randomly selected for the federal verification process, it helps immensely with that process. Otherwise, you will have to request a tax return transcript from the IRS and send it into your school. So for those reasons, we highlight and recommend the IRS data retrieval tool. Once it's been retrieved, you will not see any numbers. That's another security feature that the federal government started. You'll only see the words on appropriate lines, transferred from IRS, transferred from IRS. So you can't even make a change. There's no number there for you to change. The one area that you can enter is your parent 1 and parent 2 incomes, like I mentioned before. If there's 2 parents working, split up that AGI, 150, something like that, Don't leave them blank because then you're losing $4,000 in the formula. And another little pop-up that sometimes parents miss that could negatively hurt your EFC as far as increasing it, is if you had a job change and you rolled over your 401k account from one account to another new employer account and it was a complete rollover, then the IRS data retrieval may see rolled over tax information, and they'll ask you, is this a rollover? And you can say yes or no. If you say yes, great, it removes that amount of money as available income in your EFC formula. If you miss it and your EFC is now $92,000 because you rolled over 400K or something like that, call us. We can, with the proper documentation, we can edit that for you. So it's not forever an error, but we would need supporting documentation. IRS data retrieval, again, just to continue, it's highly recommended. And both it's available for parents and students if they filed a tax return. If you didn't file a tax return, you just say did not file. And then if the student made $3,000 scooping ice cream along the canal, then you just list their W-2 of $3,000 as wages, but they didn't file a tax return to extract because they didn't, quote, have to. But they may have, they can do that too. And this is the information about the rollovers and the joint income. List both incomes. FAFSA filing guidance. As I mentioned, the parent is the biological parent's mom, dad, or the custodial parent, the parent whom the child lived with the most previous 12 months to the date of the filing the FAFSA. No grandparents, no aunts and uncles, nothing like that. So if there's a unique situation about that, that's when you might want to call your financial aid office and say, hey, this is the scoop. Having a student move away from mom and dad's house because they're not in agreement with mom and dad's rules does not make them independent for FAFSA. That still requires parental information on the FAFSA. Independency is not an easy thing on the FAFSA. It's truly a unique case that has to be fully documented. There is unique circumstances where the child's been removed from the parental home, abused, something, then we could make that child independent, again, with the proper documentation. And what that is doing is it's eliminating any parent income and assets on the FAFSA and just the student income and assets. Step parent income and assets must be included. So if the mom and dad, as of today, you're remarried, you have to list your new spouse's income and assets on the FAFSA, regardless that they are not the biological parent of the child going to college. Assets reported as of filing the date of the FAFSA. Just do it one and done. Do not go in and make changes to your assets all the time. Here's the situation of if separated or divorced at the time of filing the FAFSA, but had a joint tax return, the custodial parent can just enter their own income and assets. If the divorce or separation happened after the filing, that's when you contact your financial aid office and we can remove one of the incomes with proper documentation. Common errors on the FAFSA, incorrect social security numbers. It amazes me how many times we get disjointed. The feds can't confirm the student's ID or identity with somebody's got a wrong social security number. So make sure you're typing in the social security numbers correctly. Incorrect marital status, I kind of talked about that as far as being remarried. You have to count the income from the step parents. Some families exclude untaxed income. The parents have to list any child support received, any pension payments made to their accounts in that academic year. Again, you're not counting the value of your retirement account, but you are counting the contributions toward it as untaxed income. Incorrect household size, number of members in college, that can ebb and flow as the cycle goes through, so you may be selected for verification, and that's what we will document. And incorrectly adding the value of your 401k and your primary home in your assets. Do not do that. That will skyrocket your EFC. Yes?
You're including the child that is enrolled in that number of households.
Yes. Number of household is the child that's going to be enrolled, and if it's the only person, it's one in college. Don't count mom and dad as going to school if you're doing classes. So that's a quick summary of what the FAFSA is asking and where you file it and what you file it, information you include on it. Some additional 2 types of documents would be the College Scholarship Services CSS profile. This is pretty much the FAFSA on steroids. So this will be required from your schools that might need 100% need, and thus they want to know every penny of resources available in that household. They want to know the home equity of your home. They want to know the income of the non-custodial parent. They want to know the value of your 401ks. So that's not what I just said on the FAFSA, but if your school requires a CSS profile also, then don't be surprised if it's asking all this stuff that you just didn't tell the FAFSA. Don't do a CSS profile unless you have to. Confirm on the school's financial aid website or something, or the admissions instructions, if you truly need to do a CSS profile. It costs money, it's $25 per school, so, and it's a pain to do, so you don't really want to do it unless you have to. Another form for all our New York State residents is the New York State TAP application. Now, New York State TAP is a high need grant program from New York State because you've lived in the state at least 5 years, paid tax for New York State taxes. If the parent net taxable income is $80,000 or less, the student may be eligible for some type of TAP award ranging from $500 to $5,665. That's per year grant money that the student does not have to pay. Now, the nice part about the FAFSA is at the end of it, when you're ready to hit submit after you entered your FSA ID for the parent and the student, there's a big box that says, do you want to file your state return? And if you seize the opportunity to hit yes then, the TAP application will extract a lot of the information from the FAFSA, and the TAP application will go really smoothly and quickly. You just enter, 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 boom, done. So if you miss the big button that says, do you want to file your state return? Now keep in mind, it won't say, do you want to file New York State TAP? Because it's just the word state return, because the FAFSA is a cross-country form for all the different states. They're not going to list every single little state application. So that's what you're looking for. Do you want to file your state application? And we recommend doing it then. If you miss that opportunity, no problem. The FAFSA still has to process for 3 days before you can go to the New York State HESC website and file it. So you just have to pause for a couple days. Okay, so that's a down and dirty of what the FAFSA is doing, what the CSS profile is collecting if you need to do it, and the TAP application. Now comes our role. So you're gonna submit these forms on October 18th, whatever. The sooner the better. Frankly, get it done, get it out of your way, check it off. And that's just gonna sit in our databases until we're ready to use it to package your child. So don't be concerned if you haven't had a financial aid award letter instantly after filing the FAFSA. It all depends on our processing timelines and stuff like that. The student will know when the FAFSA has been successfully completed because the student will receive what's called a student aid report, a SAR, S-A-R, another lovely acronym, to the email that you list on the FAFSA application. So be looking for that, and that will indicate if the student's been selected for federal verification, or if it was not signed by somebody and it's not a complete application, et cetera, et cetera. The colleges will also get what is called an institutional student aid report, an ICER. And we get the same information that the child is receiving. And if it's incomplete, we'll try to reach out to you saying, mom or dad forgot to sign it. Both parents don't need an ID and both parents don't need to sign it, just one parent. But oftentimes parents forget, they miss that part. So your application is incomplete, awaiting a parent's signature. Yes?
Is it important not to put in for FAFSA until you already know if it was accepted or not?
No, you can do it.
Because then you lose bargaining power. I mean,
not really. No. In fact, every school kind of likes a FAFSA. We like to see.
but are you making a decision on the FAFSA?
No, I personally, I can't speak for every college, but Nazareth does not. No. Nope. But it's helpful because you may think through this whole presentation, you're like, I'm not going to get any need-based aid. I'm not going to do the FAFSA. Don't think that way, because schools have their own need-based pot of money. And I won't give a Nazareth need-based scholarship unless a FAFSA is filed. So, be cognizant of every school's got their own awarding strategy for merit money and need-based money. And oftentimes they're going to want a FAFSA to even consider need-based money. And then, so once we get these EFCs and ICERs, we are going to award the student all the appropriate institutional aid, need-based aid, talent aid, et cetera, and inform the student in an email or paper version of an award letter. Okay, now we're gonna get into the secret sauce of what your EFC is. Expected family contribution, because when you see the number, you're like, what are they thinking? So the EFC is not a prediction of the amount of money you have to have in the bank account to pay for college next fall 22. It's an indicator, it's an index to see if the student is eligible for federal need-based money, which is primarily the Pell Grant, a subsidized loan versus an unsub loan, the SEOG grant, which is a high-need grant fund, and college work study. If the need works out and the EFC yields a needy student for these types of aid, then they will be included on the student aid financial aid award letter. So that's what the EFC is. If you're $5,000 or under, you're gonna get Pell. If you're $5,000 and over, you're not gonna get Pell. But you may get NAS need-based money instead of Pell. So that's why colleges use it to see, okay, they're not needy enough for Pell, but they're definitely needy for my institutional need-based money. 4 elements are pretty much comprised and collected off the FAFSA. And we kind of talked about these: parent income and assets and student income and assets. Again, we're taking a deep dive here a little bit, so I'll try not to bore you too much. Under the parent's income scenario, they're gonna ask, or the formula is using the total income, taxable and untaxable, which I mentioned, child support received, 401k payments. From that, they're gonna subtract expenses the parent has to pay outgoing, child support paid. From that, they're gonna subtract taxes, federal, state, FICA. Everybody has to pay taxes, so that's not usable money to pay for education. So the formula subtracts that. And then they subtract an income allowance according to the number of people in your household and the age of the older parent and stuff like that for basic living expenses, not everybody in Rochester, Monroe County living expenses. This is a basic number of like $23,000 to support a family of 5. So it's not realistic, but it's a number. Employment allowance is subtract a $4,000. That's the money that's being subtracted if you list parent 1 wages and parent 2 wages on the FAFSA. So after that, at additions and subtractions, they come down to an available income to use to get to the EFC. Next, the FAFSA formula looks at the parent's assets. It looks at the cash and savings that you listed. It's gonna look at the farm income investment if you listed anything. It's gonna look at the real estate and investment equity. If you listed any 529s, it's gonna count them. Doesn't count all of them, but it takes a percentage of them. And then there's a protection, an asset protection. It kind of protects the parent's assets a little bit. The formula is kind of tweaked. It's not as protecting of assets as it used to be, but there is some protection. The student is hit harder on assets than the parent because the theory is the student doesn't have the living expenses and household expenses that a parent may have. If they have money in the bank, they should be using it towards education, according to the federal government. So from those 2 numbers, they're gonna come up with available income, and from the assets and come up with an adjusted available income. And then there's a chart that they look at, and then they divide it by number of kids in college, and they get the parent EFC contribution. So if you see a weird number, that's how they're kind of getting to it. They're gonna do the same thing on the student income. They're gonna look at the student's income that you listed, taxable and untaxable. They're gonna subtract any student wages. So here's a common myth that families like, oh, I don't want my child working. It's gonna hurt them on their FAFSA. No. The student wages are protected up to $7,040 in this formula year. So the student can go out and work all day long over the summer and save some money for books or whatever to have some buy-on in this process. So don't be afraid of letting them work. And then when they're at school and they use college work study funds or co-op funds, that is also extracted, protected up to $7,000. So again, no reason why they shouldn't be working. And then taxes are subtracted under the student wages, and then they protect $7,000. So only income over $7,000 is counted on some level in the student part of the EFC. Then they do a percentage, and they come out with the bottom line income. Same thing with student assets. They start with the cash and savings for the student. If the student has a farm or business, great, you add that in. And then they take roughly 20% of the assets, not all of the assets under the student, but if the student's got some cash in the bank, they're roughly going to take 20% of it in the formula. So here's some examples of Daniel. And you can see we've got like a family of 5, one in college, income of 120, parents' assets are 0. We've got the 2 wages of 120, so they're seizing the opportunity of that exclusion of 4,000. And the student's income is way under 7,000, so it's not using any piece of the student's income. And the student assets are only $300, so 20% of that is going to be the $60 that you see. So you can see the total EFC is $18,400, kind of unique to this family. This is not standard along every wage situation. And you can see that the majority of the $18,427 is coming from the parent of $18,367, and the student is contributing $60 towards the EFC. So we're going to use the total number of $18,427 to determine the student's financial need. Here's a sample of Nicole, 2 in the family, 1 in college, divorced household. So we have income of $36,500 from one parent of $36,500, limited wages and assets for the student. This is a high need student with a 0 EFC. So this student is going to get max Pell. They're going to get max TAP. They're going to get probably max SEOG and need-based money from the school. So I keep mentioning this financial need term, if the student is needy enough for this particular federal fund. So let me define need for you. This is a standard definition across all colleges, all federal Title IV colleges, is that college's cost of attendance minus the student's EFC that we just painfully went through on how that number is being calculated, and equals the student's financial need. So that financial need in EFC is going to determine their eligibility for certain types of funds. You may say, Jan, what is in a cost of attendance? There's, again, Title IV standard 5 elements in every school's cost of attendance. It's tuition and fees, room and board, books and supplies, transportation, and miscellaneous and personal expenses. Now keep in mind, you're not going to pay all of those 5 things. You're going to pay the first 2 if the student's living on campus. Full-time annual tuition and fees and room and board. But schools have to disclose their estimated books and supplies for the year, transportation coming and going in August and November and Christmas and January. You know, are they plane tickets? Are they trains? Are they, just cars? And personal and miscellaneous expenses if the student is an art major, they may have art supplies. A dance major may have dance shoes, stuff like that. So we don't micromanage every student's, but generally schools have an estimate. For example, NAS estimates $1,000 for books, $1,000 for transportation, and $1,000 for personal and miscellaneous. But those aren't charges I'm charging, but I have to kind of disclose to you that's what it costs to be a student at NAS. So your need is going to vary according to the schools you apply to. And on the FAFSA, you can list up to 10 schools to send your FAFSA to. If you want to add school number 11, you got to take somebody off of that list of 10 to add the 11th one. So your EFC is going to be standard among all the schools you send your FAFSA to. But your need could vary according to that unique school's cost. And you can see this in the slide a little bit. And the next one is a more visual one of, here's your private, high-end private school, cost of attendance for the year, $65,000. The student's EFC is $15,000 across all types of schools. But they have big need on your high-end private school. $50,000 is the red need number. But on your mid-tier privates of $45,000, the student's a little less needy. And your SUNY schools, the student's even less needier, of $5,000 of need. So don't be surprised, depending on the types of schools you're applying to, if your need-based aid is different. Maybe one school he's getting work study and a sub loan, and the other school he's not. So that's why. Your need available eligibility for need-based aid could vary according to that school's cost. So that's just some comparison of what the EFC is doing, how the schools are using the EFC to package and award federal aid. Let's talk about what type of aid, what is aid? So many times I hear, oh, loans aren't aid. Well, no, it is technically a type of federal student aid. You can choose to decline them, but it is a type of aid. So the main categories of financial aid are scholarships and grants, which are gift money that the student does not need to repay, loans, and work study. So loans are self-help aid, and work study is considered self-help aid because the student has some buy-in by borrowing and or working while they're in school. Within those categories of aid, you have different types. You have merit-based money, you have need-based money, and you have non-need-based money, such as a talent scholarship, a program business scholarship, a nursing scholarship, stuff like that. So you don't need to know this, but the schools tend to categorize the type of aid. Oh, that's merit money. Oh, that's need-based money. Within the grants and scholarship arena, you have the federal Pell Grant. It went up, $64.95. So an EFC of 0 is going to drive a max Pell Grant of $64.95. EFC in the middle of 5,000 range is going to be about a $800 Pell Grant, and real close to the cutoff of being a Pell or no Pell might award the student $845 of Pell. Those are just some examples of how the EFC is going to drive the amount of Pell. SEOG can vary across all your schools that you apply to. SEOG is grant money from the federal government to schools based on their population of students, and every school has a different pot. This is the type of money that tends to go quickly. So if there's any type of aid where people say, Jan, is the aid going to run out before I file the FAFSA? The SEOG is going to be gone. If you're a late filer, chances are there's no more SEOG to award, even though you may be a high need student. So that's why we recommend file early. The Teach Grant is a federal grant program of $4,000 for students who are interested in the teaching career. And there's an agreement to serve after they're done with college to teach in these certain types of teaching fields. But it's not a need-based aid. It's $4,000 a year from the government. We call it a GROAN because it's a grant that ultimately turns into a loan, because usually the student does not meet the service agreement tied to it after 4 years. They change their majors, they don't work in the teaching career they thought they were going to, and then the government flips it to a loan and charges them interest from day one as a freshman. So you don't want to jump into a Teach Grant unless you know the student really is going to just do that profession. State TAP, we mentioned, that's a $80,000 or less income. And then you've got grants from the institutional and private arenas. Scholarships, same thing. State merit scholarship of $1,500. If you may not be eligible for the need-based TAP money, but if your student is in the top 10 of their high school ranking, they may be eligible for state merit money if they go to New York State school of $1,500 a year. So there may be value in filing the TAP application for that. And then again, your school is going to give you a scholarship. Outside companies, Wegmans scholarships. I don't know, was it Taco Bell? I think was the highest outside scholarship I have ever seen. Literally, the student comes in with a big check of like $10,000. Unbelievable. And yes, she worked there and stuff like that. But I mean, there is outside money. You just have to seek it. Loans is a type of aid. And by filing the FAFSA, the student is eligible for the federal loan program. These are student loans. No, mom and dad are not co-signing. Mom or dad are not involved in them whatsoever. But it's a limited amount every year based on the academic level. Freshmen can receive $3,500 and $2,000 unsub. For sophomore, $4,500 sub, $2,000 unsub. Juniors, $5,500 a sub, $2,000 unsub. Seniors, $55,000 and $2,000. And the difference between sub and unsub is how needy the student is. If there's room for a sub loan, a need-based subsidized loan, you're going to get it. And it means it's interest-free the entire time the student is enrolled for 4 years. It only begins charging interest when they're done with graduation after a 6-month period of time. And then when they begin repayment, then and only then do all of their sub-loans start being charged interest at the annual rate it was locked at as a freshman, sophomore, and junior. So the fixed rate right now is like 3.73. So they're good fixed interest rate loans. Might be a good way to start some credit. The unsubsidized, let's say the student's not needy. There's no room for sub-loan. That doesn't mean they don't get anything. They still get the $5,500 from the federal government. It's just all unsub. And that means the government's not going to pay the interest for the student while they're in school. It's going to be charged behind the scenes. There is no payment required the entire time they are enrolled, at least half time. All these loans begin 6 months after graduation. But there's interest accruing behind the scenes. You can send in interest-only payments and knock it down. You can prepay them early, completely up to you. So if the student were to accept their annual student loans every single year for 4 years, that totals $27,000. And on a standard 10-year repayment cycle, that is about a $280 monthly payment. So that's what we call skin in the game for this 4-year educational event. Institutional and private loans. On top of the federal programs, if the student needs to seek a private student loan to pay the balance due, they are available. You shop like the market, Google student loans, and most of them will require a credit-worthy cosigner. So mom or dad or someone's going to have to co-sign when the student is trying to borrow a $28,000 loan to pay the balance to go to NAS. The bank won't give it to the student themselves. They want a co-signer. Again, no one has to make any payments on these loans, every type of loan, until the student graduates. Work study, 2 types of work study. We got the need-based kind called federal work study. We got the non-need-based kind called institutional work study. So again, I'm going to automatically award people $3,000 if there's financial need in their work study and add it on their financial aid award letter. But that doesn't mean I'm finding them a job. They still have to go through the interview process and apply for a campus employment and stuff like that, and then turn in their paperwork, and then they start getting a paycheck, et cetera, et cetera. So it's an opportunity to work, earn money while they're in school. The earnings do not go around and pay the bill. They are paid to the student. They put them in their bank account. They stockpile them for next semester's books or maybe a study abroad, plane ticket, something like that. So again, we encourage work study, whether it's campus-based or federal, because it engages the student, it gets them out of their dorm room, it makes them meet people, it has another network of people that they can go to if they're having a hard time. We've had lifelong relationships with our financial aid student workers. We get invited to their weddings, their first babies. I mean, it's a wonderful outlet for a student to feel still, cared for. It's outside of their normal other peers, stuff like that. Okay, other financing options. So we talked about the types of aid. You're going to see these on your financial aid award letter. And oftentimes the award letter, at least at NAS, will say, here's your estimated tuition and fees and room and board. Here's all your aid that's going to help pay those. Work study is always subtracted from that total of aid because it doesn't go to the bill. It just goes to the student if they work. And then we're going to say, this is your balance due for the year, estimated balance due. And we also give parents and families information how to pay that. We don't leave you in the dark. So 3 common ways to pay any balance due that you may have at your schools: Parent Plus loan, payment plan, or private student loan. The Parent Plus loan is a loan from the federal government. You apply at the same site, FAFSA.gov or federalstudentaid.gov. Parent signs in with their username and password to identify them, the parent, not the student. Student's not on this loan whatsoever. You're going to borrow the whole amount. It's not capped like the student federal loan. So if you need $32,000, you can borrow $32,000. I mean, the government's going to say yes or no, but generally the dollar amount's not the issue. The current rate is 6.28%. There is a 4% origination. So when you apply for $32,000, you're not going to get the whole 32. You're going to get 96% of that. And it's sent directly to the school. And you want to start applying for these loans after you see the bill come out around July, before it's due in August. apply for the loans. The school has a month to get them on the student record. So now there's a game plan, there's a pending balance due loan that the student accounts can say, okay, they're satisfied. Oh, their bill's satisfied. We never see the money until September, but at least the game plan has been disclosed and approved. If you don't want to borrow and you've got the means to pay for a monthly payment plan, typically it's your balance due divided by 10. So on a $20,000 balance due, it'd be $2,000 a month, set up on an interest-free payment plan. You usually begin in July. You pay every month through April of that academic year. And then you're done. Nobody's borrowed anything. You've just paid as you go. But that's the only type of plan. You can't call your school, usually, I don't want to act for NAS, that's the payment plan. You can't say, I want to pay $50 a month. You know, it's like that's the balance divided by 10. That's what the payment plan is. A third way is called the private student loan. Let's say mom and dad don't want to be the primary borrower for their child. They'll say, okay, hon, I'll help you get a private loan. So you shop around on Google, you find the main private lenders out there. They tend to be variable interest rate loans, not fixed rate loans. Mom and dad's name is on the application too. The bank says yes or no. They inform the school, and then we add that private loan as a source to pay the bill, and the student accounts is all happy. These loans also begin after the student graduates. 6 months after graduation, everything begins. There's usually not a origination fee on the private loans, and they're tied to the prime market, so it all depends on the credit scores of the applicants. On to some closing comments. Things to remember: file your applications on time. Get your FAFSA done. It's way easier than it used to be when we went to school. It's intuitive. If there's questions pop up, if they think you might have answered something incorrectly, you're like, did you really mean to say 17 people in the house? You know, so it's very helpful and easy now with the online system. Call us if you have any questions or challenges. Use your 2020 income. If things are drastically higher in 2020 than they currently are now in 21, or even come 22 when the child is actually going to college in August 22, and you just lost a job, God forbid, then that's when you call your financial aid office and say, my income is nowhere near what that FAFSA is saying. How do I update it? And then they'll guide you through the steps. Report income and assets and marital status as of the day you're filing. Here's some additional resources for if you can't sleep at night. There's some awesome financial aid websites and scholarship search engines. We really, as I mentioned before, it's time consuming. Nobody wants to do it. You got to apply for at least 10 or 15 to get one. But there is outside scholarship money available to students. Usually once they get it, it tends to renew. They're not doing that application every single year. So it's worth the time and energy. I had one incoming freshman one year come in with like 10 outside scholarships. I had to create making new funds for her because I'm never used to that many freshmen getting that much in outside awards. But her mom made her do an application every month throughout senior year. So it kind of paid off for her. Here's my contact information again. Happy to answer any questions you may have tonight. Yes?
So you have to fill out the FAFSA every year, so your kids are in school for 4 years, so every fall you're filling that out.
Yep, absolutely. And you got to apply for the PLUS loan if that's your vehicle to pay the balance every single year too. You can't borrow all 4 years worth in the freshman year. Great questions. Any other questions? Yes, sir.
I heard a couple of dates. You said, oh, this Friday, but then you said something, I don't know what the week that was.
Yeah.
So wait till a week or so.
Yeah, I would. I wouldn't do it Friday.
I think the 18th also.
Oh, that was just a number I was throwing out as an example. So it opens up October 1, and every year the financial aid community is informed of the student who filed on 12/01 on Friday. But, you know, there's always some issues usually, so I would just wait a week or so. I don't care when you do it, but just wait a week before. Yeah. You won't miss it in a week. 2 or 3 weeks is totally fine. I'm talking late filers is like June or April of their freshman year is like too late to get any SEOG money. But October, November, you're totally fine. You know, watch your early decision deadlines. If your student's applying early decision to their colleges, usually they want their admissions application by like November 15th, and they want the aid application by 12/1 or 12/15. So you can't do that in February, you know, for an early decision one.
Is that the same for early action or not?
Probably yes. They're very similar terms. Yes. Great questions. Yes, sir.
So for your income reporting, the information can be tied back to a tax return. Whether you use that data extract tool or not, it still can be tied back. Is that a part of the process? The government will go with your tax return and confirm it all?
Yes, it will extract just the 2020 tax return year. Is that the question?
Well, let's say I don't use the extract.
Okay.
I just do it all by hand.
Yes.
Will there be some reconciling process at FAFSA?
Not really.
Go back to your tax return?
Not really. Only if the student's been randomly picked for federal verification. And the federal government picks about 30% of FAFSA filers. So that's the only time that we would ever bother to know if you knuckled in the right number.
And then on the asset side, there is no.
Nope, there's no confirmation.
Like putting bank account numbers in.
Typically not for the federal methodology form, could be a different answer for CSS profile schools. They may want bank statements, 12 months, X months worth.
Okay. And I'm assuming if you have an asset that doesn't have a great market value, put it in best asset.
Exactly. Yep. Your value minus any debt against it is your net value. Yes. Yes, sir?
Yeah, what if a 529 was established by somebody that was not either parent?
Then that's not on the, good question that comes up. I didn't mention this one. So grandma and grandpa started at 529 when the kid was born, when the student was born. And now it's X thousands of dollars. That is not on the FAFSA at all because it's not a parent asset. It's not a student asset. How that comes into play is as the student is like a junior and they're filing the FAFSA, and there's a question in the resources section that says, did anybody pay money on your behalf as being enrolled in a student? And that's where you would kind of say grandma and grandpa paid, if they paid the bill with that money. That's how it comes into play.
If it's saved for a father, his checking account balance is much higher than it normally would be. So right now, let's say it's $3,000, but by the time June comes around, it'll be $0 because you use all those funds for a car, but I don't want to hold against that.
Don't file the FAFSA till after he buys the car. It's technically your answer. It's like, you don't update assets. It's like as of today, there's 3,000 in it, then that's what it is for this academic year. But after he buys, buy the car, then do the FAFSA. That's how you want to eliminate 20% of that $300 being included. Is it going to shift your need analysis? Not probably a whole heck of a lot.
So we still have the website. Is it going to give you your EFC? Right?
Yeah, at the bottom of the form, it should spit out your EFC number.
Yeah, and once you have an EFC, can you go back and put more information in?
I don't think you can hit the back button at that point in time. It's kind of like submitted it.
So once you submit it,
Yeah.
you don't get an EFC input.
Yeah, either it's a 0 EFC or it will say unknown or incomplete or something, and then you may be able to go back and fix something. Yes?
So, just to kind of piggyback onto this question, so you said that they will also look at the student's income. So my son did have a job in 2020, but he made very little. It was a seasonal thing.
Yep.
He pawned a couple $100, so that will show up as his income, which he said won't count against him. Now, on the flip side, in 2021, he worked a lot more, and on the like his $5,000 in his savings account, like 2,000 of that was made this year during his.
Doesn't matter. You use his 2020 income only.
So that money that he made in 2021 will show on his savings account, and that will count against.
Yeah.
And that will count as part of his.
There'll be an asset for him. But it would be reflected as income for him in the next academic year. It's always 2 years behind. You know, there's a FAFSA forecaster. I didn't say it, I didn't pitch it tonight because you can do the real thing in 4 days. And it's not behaving like it normally does, but there is a FAFSA forecaster at FAFSA.gov. If you Google FAFSA forecaster, you can kind of input your numbers and see where you're gonna land. And then you can say, okay,
Change that very,
Yeah.
like $100 in the savings account versus $5,000.
exactly, and see how it impacts it.
See how that-
Yep, and it probably won't change it a whole heck of a lot.
I see all the resources for scholarships. Is there anything like Common App where you can go to one site and kind of look at a lot of stuff, and kind of fill out one application, submit that, or not really?
The FastWeb, we recommend FastWeb.
Yeah, FastWeb is good. There are multiple websites, but honestly, a lot of them that you're going to find are these big nationwide scholarship searches, which are tough to do. I pay close attention to information on our McQuaid website.
Yep.
Anytime scholarships come across that we think are well done or accessible, we put those out there. There's also a good website called Going Merry, GoingMerry, which is a relatively new website, which tends to be pretty well done. Yeah, it's Going Merry, GoingMerry.
Huh, Going Merry.
Yeah.
Huh. Another good one is Rochester Area Consortium, RAC.org. That's a local website. It's very, very helpful to our local families. I mean, it can narrow down the criteria of, did you graduate from Honey I Falls and drive a yellow car? Here's $500. You know, it's really, our local kids do well on that site. Yes?
How does it work from the college or university perspective as far as the application for admission submitted? That goes to the admissions. Are you only working on students that are admitted?
Yep,
Because we're gonna submit not knowing if they got admitted?
correct.
So you wait to hear from admissions
Yes,
and then review.
exactly. Yep, I don't package people that are not admitted.
But we send to every school we're applying to.
Absolutely. Yep, and that's why I said it could just be a lag time. You've done your work and you won't hear from anybody for a few weeks or month. Yep. Great questions.
So if you have an asset that isn't readily valued, you can't really assess the value to it, and you just decide it's too hard, I'm not going to declare it. What's the right way to do it?
How could you not have a value to it?
It doesn't have a market or something in that nature. So I'm just saying, like, I'm just
But-
throwing out these scenarios. I got a Cayman offshore account.
Oh, yeah. Oh,
Asset, right? So if I don't want to declare it, what's the punishment?
kind of, I mean, again, if you're randomly picked for verification, we don't verify assets. It's the honor system, in all honesty. You know, it's kind of, the federal government is like, they're trying to give their money to the neediest people. And they expect honesty. You're signing a federal document saying, I have told you everything honestly. That's your penalty per se. And on the CSS profile, they may want stuff.
When you hit submit, you're not hitting like letter penalty or there's no legal statement.
There is at the bottom saying, yeah, I attest that these numbers are accurate. Yep, there is.
Probably the same as when you're filling out your financial aid.
Yeah.
Same thing you have to fill out when you're filling out the FAFSA form, write it all down, this is the best of my ability, I'm estimating my RG bill, I'm estimating
Yep.
expenses.
I mean, we see a wacky trends, you know, with a student with one parent one year, next parent next year, you know, we can come in and say, listen, I'm choosing to verify you. It's not up to just the government.
I want to put a plug in. Jan mentioned the Rochester Community Foundation. It's a Rochester Area Community Foundation. The website is racf.org. That's a great resource also. And like Jan said, it's really specialized to the Rochester area. It takes a little bit of searching, but there's specific scholarships for kids from certain towns, certain majors.
Yep.
They do a masterful job of collecting donations, and they have a really hefty scholarship
It's
fund.
an admirable organization.
Yeah,
if you're going to
it's-
tell them your email and stuff like that, because that's the other thing. Some of these websites for scholarships, they're just going to hound you for other stuff. You had a question over there?
Do SUNY schools tend to be CSS profile
No, usually not. Just FAFSA. Yes?
Yes, so for guardianship, it's only the student who will be filling out the forms.
Yeah, if there's true legal guardianship paperwork, not custody, then the student is just an independent student and it's just their income and assets from 2020 and current assets. So chances are high, those numbers are probably gonna be low and the EFC will be 0 or something very small. So the student will be high need and eligible for need-based aid. Yep, but the schools will require proof of legal guardianship. And if we don't get that, then we demand parent information.
Jane, can I ask just to speak on two topics? One about, what effect did you see COVID having on the financial aid system last year? I have a lot of anecdotal stories from our graduates from last year. And number two, maybe you could talk just a bit about the appeals process. I know it's a kind of a mysterious, convoluted, overused term, but
absolutely. For number one, the COVID impact, huge impact on the work in the financial aid office because the federal government gives us it's called professional judgment authority. And we can, with the proper documentation from a family, use a different tax return year than required. So our current our students in 21, 22, they had to report 2019 income, kind of pre-COVID, everybody losing their jobs and stuff. So their income was inflated compared to reality. So we had a lot of requests for professional judgments where we have to get the 2020 tax return and year-to-date 21 income, and we do an analysis of what is the best for the student, and then we can choose to use 20 or 21 income. So we expect this trend to kind of happen for the next few years as we navigate this new space. So it's a huge impact. We've seen a big increase in professional judgments. And what that's going to garner the student is if they're EFC, and there is even a federal flexibility that told us if the family member, parent can document unemployment, pretend they make 0 income. Make their income wages 0 and 0 in their AGI for 2019 income. So that brought EFCs down dramatically and oftentimes opened up eligibility for the student to get a Pell Grant, a subsidized loan, work study opportunity. So again, the federal government gave us these tools to say, reflect the current income in the household to pay for college and let me give them need-based aid. So that was the intent of professional judgment. So did I answer that
Yeah,
question?
absolutely.
Big impact on that. Yeah.
I'm sorry, this is not about a senior that's like complete, but then I have a son who's a senior in Oswego, and now I'm getting back an invoice from last spring, which I thought, so from what you're saying, then I can contact the school.
Yes, and say my
So my reduction.
yes. Yeah. For this academic year, for 21-22. Yeah, it's kind of tough to do it for 20-21. Yeah, and then along those lines too, current families that have students in college, they probably got some HERF money, some CARES Act money to the student level. So I mean, there's definitely some resources from the federal government to colleges and students during COVID. The second question, appeals. I can speak from Nazareth's process. I can't speak for other colleges' process. But you're always welcome to appeal your financial aid award letter. And we will see if there's any additional resources we can offer the student. Maybe 0, maybe a nominal amount, $1,000, $2,000. It won't be another $10,000. It's going to be, we're going to see what we've awarded already, what they're eligible for. We may ask, why are you appealing? Is it an income shift, a change in income, new expenses, higher medical expenses? Something other than I just want more money. So there's a dialogue that happens. It's usually an appeal form. You can share other competitive offers from other colleges. That's helpful for us to see what's going on in the market. And sometimes we use that information to increase our packages. But I would say contact your local financial aid office at the school. But from a NAS perspective, we get probably 500 appeals on 500 freshmen. Everybody appeals. It used to be years ago, it was the outlet to show I need help, but now it's watered down to everybody appeals, whether you make $1 million or $10,000. Any other questions?
When you look at investments, is it the fair market value on that?
Yep. Yep. Anything else? Yes?
You mentioned that it can only apply to about 10 schools. If my son's applying to, let's say, 18, how do I go about choosing which 10 I know something?
Right. You can apply to as many admission to as many schools as you want, but there's only 10 lines on the FAFSA to send the FAFSA to. So he should pick his top 10 that he thinks he's really going to go to get an aid package from. And then if those top 10 deny admission to him, then you take those 3 out and you add the next 3. No, nope. You can. It's called a correction. You don't want to do a new FAFSA. You just want to go and correct the existing one, take out a couple, and add new school codes. Yeah, it happens all the time. The TAP award is only going to be targeted toward the first FAFSA you list on your application. So maybe make that the New York State school. If you're going to go to Pennsylvania or something, make your New York one first. It can always be realigned, doesn't matter, but I'm just saying when your other school is saying, I don't have a TAP awards because you weren't listed in the very first box on the federal form for TAP. But it can be redirected to where you actually go to school. In New York, they can get the TAP. Well, fun stuff, guys. Woohoo! Good luck.
Thank you, Jan.
It's a fun process.